With today's market, you better not blink because you just might miss it. Hello and welcome back to your Homestead Mortgage Market Update. Today is a little bit of an interesting day. Let's take a look at this because, well, you shouldn't blink. We're going to talk a little bit more about this chart in a minute, but as you can see, we've had quite a downfall. We had a little bit of a reversal that we talked about last week, so rates are still underneath 7%, but they've definitely trickled up, and then we had another fall. But maybe another reversal? As you can see on this chart, we have quite a large candlestick. We'll break that down even further a little bit later in this video. But we're starting to see the effects of all this volatility, and mortgage rates shot up to an average of 6.83%. Do keep in mind that this statistical data is an aggregate of all the loans that were created over the last week. And it comes out every week on Thursday. So on this Thursday, tomorrow, April 24th, we'll get more data and it'll likely stagnate or rise a little bit higher. But as you can see here, 6.83% if you're putting 20% down and you're buying down your interest rate. So it's a little bit up there. It's decent. It's better than we've had before in the past, but we're heading into bad territory. And let's take a look at some of the factors that are especially affecting today. Trump versus the overall economic outlook, it's starting to move in the downward direction. At the start of his presidency, and we're about day 100 right now, at the start of his presidency, he had great economic outlook. People were very excited about his policy on tariffs, on taxes, on tips, and different things like that. But as time goes on and Americans are starting to feel the crunch, it's starting to sour a little bit. His approval ratings on the economy are still above 50%, but they are turning down. Trump on petroleum is actually fairly good. If you're living in California, like we at Homestead Mortgage are, maybe this doesn't really apply, but the rest of the nation is starting to see petroleum prices come down, which is going to contribute heavily towards inflation benefit. And then Trump versus tariffs. Well, the overall sentiment is, we hope they're going to do good. Everyone's saying they're going to do good. The economy was going to bounce back a little bit a few days after tariffs were implemented, but then other news came in. So the general sentiment on this is somewhat negative, but the really bad news is Trump versus Powell. All this talk about Trump wanting to get rid of Jerome Powell if he does not cut interest rates is giving the market a little bit of uncertainty. When the left hand and the right hand don't know what they're doing together, it causes a lot of uncertainty. But in terms of inflation, Trump versus eggs, the cost of eggs has come down about 56% since they went up to, what was it, 270-ish, maybe 240-ish percent under the Biden administration. So there's a lot of inroads being made there. And in addition, we're going to start to see egg prices come down even further. And then today, Trump versus India. India is one of the very first nations to come and actually hash out final details of their trade deal with the United States. And this has been received as extremely good news. The crypto markets, the stock markets, and the mortgage markets have taken a great outlook to this. But we still, of course, have Trump versus China, and the general sentiment is that this is bad. It's not good. If there isn't a resolution, this could mean international trade wars, and it could mean issues of countries picking sides between the United States or versus China. So overall, there's a lot of things that are skeptical, that don't look good, and I'm sure you can think of more things to add to this list, to the red, or more things to add to the green. But this is just the general market headlines of why the chart looks like this today. So mortgage-backed securities, green and up is good. Red and down is bad. This is an inverse of mortgage rates. So if you were to flip it on its head, it is the general direction mortgage rates are going. And take a look at today, April 23rd. We actually had one of the single biggest increases in a particular day. We were testing the 25, 50, 200 day moving averages. All three of these were ceilings of resistance. And we had a massive rise at the start of the day. Interest rates were looking fantastic, and a lot of people were going to get really, really good rates. But as the day continued on, these ceilings of resistance tested mortgage-backed securities, and pushed it back down below the 100-day moving average. And if we actually take a look at we take a look at mortgage-backed securities as they sit in their current state, see that we have an alert to lock, which means the market is becoming more and more uncertain, and this gain is shrinking even further. As you can see, the U.S. Treasury is only down 3 basis points. Earlier this morning, it was down about 12. So as you can see, the market shifts on the daily. So don't blink, you might miss it. It's extremely important to be ready to go with clients and to be ready to lock at any point. These are the kinds of things that can make a difference right now in this market of about 0.25% on your interest rate. So do keep it in mind. And if you have any questions, reach out to us. We'd be more than glad to answer and help.